Hey guys, it is Julie here with TipRanks, and today we're taking a look at recent stock ratings from the very best Wall Street analysts. So let's get into it. Alright guys, welcome back and thank you all so much for being here. One of the great things about TipRanks is that they hold Wall Street analysts accountable, tracking their past performance and giving them a star ranking to help you know who to trust. That's why one of my favorite features is the top analyst section, where you can see the best ranked analysts and see what they've been rating on Wall Street lately. So today, that is exactly where we're looking, and we're going to see a few stocks that have all picked up a bunch of recent ratings, including some from these top analysts. Now, not all of them come in as a strong buy. We do have some mixed opinions, so we'll see what you guys think in the end. Like I said, we found these stocks today looking at the top expert section. You can find the top Wall Street analysts on the TipRanks website under the Expert Center and Top Analysts. The first one we're going to look at here is number 2 ranked analyst Patrick Brown from Raymond James. Now he has a 79% success rate with an average return of 20%. And just a couple days ago here on July 27th, he recently rated Waste Management. Now he has rated the stock 40 times before with a success rate of 82%. So let's take a closer look at the Waste Management stock. Trading under the ticker WM with a market cap of nearly $70 billion, the Waste Management stock is currently priced at about $163 per share. Now they are up just over 4% this past year with some ups and downs, but have climbed 8.4% in these last 6 months. Waste Management might be a name that you're familiar with, as they provide waste management services all across North America. They provide services that range from collection and disposal to recycling and renewable energy generation. In fact, they're working on renewable energy products that make it possible to power their trucks with the trash that they collect. They boast an unmatched scale and capability across North America with over 15,000 collection routes, 497 hauling operations, and 337 transfer facilities. The Waste Management stock has been gathering attention from Wall Street as they just came out with their latest quarterly results, and they did fall short on both the earnings and revenue side. For their Q2, they reported earnings per share of $1.51, coming in 4 cents short of analyst estimates. Meanwhile, revenue of $5.12 billion did grow just under 2% year over year, but missed by $110 million. Their CEO did note that they delivered solid results despite persistent inflation in many cost categories, and that they are well positioned to deliver strong growth in the back half of the year as these pressures abate. Now, as I said, our top analyst there, Patrick Brown, did recently reiterate a buy rating on the stock. However, he did lower his price target slightly. He noted that Waste Management continues to post solid pricing, employs a new multi-year capital deployment campaign toward green and sustainable products, and Raymond James appreciates the late cycle nature as well as the positive fundamentals and the longer-term accretion from green CapEx projects. But analysts are a bit divided on the Waste Management stock. It currently comes in as a moderate buy based on 9 current analyst ratings. And those ratings are nearly split down the middle with 5 buys and 4 holds. The average price target of $180 would be an upside potential of 10%. We can see a breakdown of those ratings here. So Patrick Brown here giving it that buy with an upside of 9%. On the low end, we do have a hold with a slight downside of 2.4% and a high-end target from Citi with an upside of 23%. The next top analyst that we took a closer look at was number 3 ranked Jason Seidel. Jason works with TD Cowen and currently has a success rate of 76% and an average return of 26.8%. And recently, he came in with a buy rating on Union Pacific. This is a stock that he's rated 60 times before with a success rate of 77%. Now, if we jump back over to Patrick Brown, we'll see that he also came out with a buy rating on Union Pacific as well. He's rated this stock 54 times before with a success rate of also 77%. So it seems the Union Pacific stock is popular among top analysts. With a market cap of $132 billion, their stock trades under the ticker UNP, currently priced at $232. Now, over the past year, they're only up 6%, but if we look at the last 6 months, they're up 17%, including a big jump up earlier this week. Union Pacific engages in railway and freight transportation. The company boasts that they are prepared to ship just about anything from food, forest products, automobiles, agricultural products, coal, and chemicals. Union Pacific Railroad connects 23 states in the western 2/3 of the country by rail, providing a critical link in the global supply chain. Their routes cover over 32,500 miles, and they do about 8.2 million annual carloads. Now, as you may have guessed from that jump up in stock price earlier this week, Union Pacific also shared their recent quarterly report. However, they actually missed earnings. For their Q2, they reported revenue of $5.96 billion, which was down nearly 5% year over year and $160 million short of estimates. Their Q2 earnings per share of $2.57 fell 20 cents short. But along with this quarterly earnings report, Union Pacific also appointed a new CEO. Union Pacific appointed Jim Vena as CEO effective August 14th. He's returning to the company after serving as their COO back in 2019 to 2020 and as a senior advisor to the chairman in 2021. Following this announcement, we saw several analysts increasing their price targets. One analyst noted the new CEO appointment and management calling out opportunities to lower costs across multiple expense categories. Benchmark believes productivity and service should improve as Vena leans on his extensive operating experience to help drive efficiencies and further improve service at the rail. The Union Pacific stock does currently come in as a strong buy with 8 current analyst ratings, breaking down to 6 buys and 2 holds. Now, the average price target of $226 is actually a downside of 2%, but let's take a closer look. That is largely because we still have some old ratings here from 3 months ago that were holds with those downsides. But the more recent ratings, we only have one with the downside here, with this hold rating here. But looking at our most recent ratings, all coming in yesterday, we do have just one with a downside here from Deutsche Bank. Then the others ranging from 3 to 5% to a high-end price target of over 22%. And next on our list, we're looking at the number 4 ranked analyst, Mark Lipicus. Mark is an analyst at Jefferies, and his 5-star rating comes with a 74% success rate and an average return of 31%. His most recent buy rating came in on Texas Instruments, which he's rated 57 times before and a success rate of 85%. And if we actually go back to our top analyst here and go a little bit further down to our number 6 analyst, Christopher Rowland, we'll see that he also recently came out with a buy rating on the Texas Instruments stock. But while these 2 top analysts came out with buy ratings, we definitely have a lot more mixed opinions on the stock, so let's take a closer look. Trading under the ticker TXN, they're currently priced at $178 per share. Now, they have seen growth of over 4% this past year and a few percent in the last 6 months, but did take a drop off here a couple days ago. Texas Instruments has a huge product catalog, but mostly they create embedded and analog processing chips. They design, manufacture, test, and sell analog and embedded semiconductors in markets that include industrial, automotive, personal electronics, communications equipment, and enterprise systems. With 2022 revenue of over $20 billion, the company has 15 manufacturing sites worldwide, with 12 wafer fabs, 7 assembly and test factories, and multiple bump and probe facilities. Their broad portfolio of about 80,000 products help their customers efficiently manage power, accurately sense and transmit data, and provide the core control of processing in their electronic systems. And you may be starting to pick up on a bit of a pattern with the stocks here today, as we have another company that just released their earnings a couple of days ago. But these guys dropped off despite an earnings beat. They reported earnings per share of $1.87, beating expectations by 10 cents per share, and revenue of $4.53 billion came in $160 million ahead. But it seems that investors were worried over demand and free cash flow. Now, our 2 top analysts, Mark and Christopher, both raised their price targets to $215 and $216, which would be an upside of about 20%. But a lot of other analysts don't seem to agree. Overall, the stock does come in as a hold, with 4 buys, 10 holds, and 2 sells, with an average price target of $184. And we see a lot of differing price targets down here. So here we have Mark and Chris with about 20 to 21% upside. But then we do have a Bernstein rating with a downside of 18%, plus a sell rating from Morgan Stanley with a downside of 7. So a lot of very differing opinions. So there we have 3 stocks that are all catching the eye of some of the best ranked analysts on Wall Street. Plus, of course, plenty of other analysts weighing in as well. This is where I want to hear from you guys. Let me know your thoughts on these 3 companies and which of these analysts do you agree with on future potential. I always appreciate hearing from you guys. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. And please keep in mind that these videos are never a suggestion to buy or sell any specific stock, just showing you what some of these Wall Street analysts are up to and providing some information and entertainment. Make sure you always do your own research and due diligence. Thanks so much for watching. Have a great day, and I'll see you back here next time.